In this video, guys, we're going to look at which time frames are best. Stay tuned. Hey guys, warm welcome to you. Right, so this is a subjective thing, right? Which time frames are best? We hear this all the time, and I see people kind of arguing over this and that and the other. And the answer is it doesn't matter. You know, all a time frame does, or a chart does, is zoom in or out on price. That's pretty much all it does. You know, if we look now at a 24-hour chart of the Dow on trading view on a daily time frame, we can see a year's worth of trade, right? We see each candle represents a day, and we see it's gone up, and there's kind of the little nuances, a little double bottom here, a little pullback here, etc., etc. But that's all it's giving us. Now, how valuable is that when we're day trading? Some value. I don't really care what's happened down here when I'm day trading. I don't really care what's happened here when I'm day trading. Am I interested that's a reasonable level there? Yeah, because that's within range of today. Am I interested to know that we've had an uptrend here and pulled back and we could end up retesting the high? Yeah, because that might be how I want to position. I think that, hey, this could be the day we break out. Or do I think it's going to now retest the low and fake out? So this is much more important to me, this kind of cold face end, than any of this. And so whilst it's useful, if you don't look at it, it's not, if you glance at it or literally say, hey, this is what position we're in, fine, and make a quick judgment call and move on, that's fine. You don't have to get caught up in saying, well, I need to use the daily chart, I need to use the daily chart. You know, use what's valid for your time frame. If you're swing trading, this becomes more interesting because you say, actually, you know what, I don't want to buy it until we come back to 3,500 or whatever it may be, or 35,000, should I say. I don't want to buy it until we get there because of X, Y, Z, or I want to wait until we've tested below this low, or whatever your frame may be. But now then we go, okay, so people are saying, all right, you've got to look at the daily, you've got to look at that. And a lot of people are fans of the 4 hour. You know, it's not my thing, but Peter, who does the Tuesday call, accountability and market scan, uses the 4 hour exclusively, and he trades currencies exclusively. And I know many guys as well who are trading crypto and stuff on the 4 hour and are doing well. Now, why? Why is a 4 hour useful? Well, the 4 hour is a sweet spot if you're swing trading between looking at so much information on a daily, and I don't think you should ignore that. I absolutely think you should understand where the price position is. But now you're seeing a couple of months back. That's far more relevant, right? It's far more relevant. If you're swing trading, it's relevant. Now, if you're day trading, do you need to go day, 4 hour, 1 hour? No, you don't. You either say, okay, I'm just going to look at my 4 hour, or I'm going to look at my day. I already know. I've got an idea of what it is. We've pushed up hard and we're pulling back. I don't need to see any more medium detail. I now need to see much more zoomed in detail. I need to go to a 5. I need to go to a 1 if I'm day trading. I've seen what I need to see. Now I need to be more granular to look for my opportunity. Whereas if you're swing trading, maybe you operate off a 4 hour, or maybe you go 4 hour, 1 hour. So the combos are generally this, guys. Don't use more than 3 time frames. That's my opinion. Okay, other people will do other things because you're getting the same information. If you are day trading, you might check the daily, then you might go, right, I want to look at the hourly, then I want to operate on the 1 minute. If you're swing trading, maybe you go, hey, I'm going to check the daily, I'm going to 4 hour, that'll do, my 2 time frames. And maybe you execute on a 1 hour. Because if you start to go crazy, I know people go, oh, I check the daily, I check the 4 hour, I check the hour, I check the half hour, the 15 minute, the 5 minute, the 1 minute. You're just getting the same information. You know, yes, you're slightly zooming in each time, but you're not gaining that much. Whereas if you take a good jump, you're getting a complete different vision. So like in 4 hour, you go, okay, fine. Maybe I want to buy it here. Now you go down to your 5. If you're a day trader, go down to your 5 and go, okay, I've seen some nuances from yesterday in the overnight session and whatever it may be. You start to see the stuff that you need to see to execute the trade within the theme of the higher time frame. So the process is always this. It's always start at the top to get your broad idea. Okay? Your broad idea. And that may be, if you are a scalper, I still think it's useful to go to the higher time frame and say, hey, we have a rising tide here. I may be scalping, I may be taking short trades, I may be in and out quickly, but the rising tide on the daily is up. I should probably make sure I'm taking more longs than shorts because that's just how price is moving. It might not translate in a 10-minute window, but it's going to translate over a day, over 2 days, over 3 days. So I should probably align with that. So even if you're not using it for your levels, which you're probably not if you're scalping, it still makes sense to understand the conditions you're in. So you start your higher time frame, then you go down to a medium time frame for the market you're trading. And that gives you the window in the past month or so, or the past couple of weeks, and say, okay, if you're day trading, okay, what's happened? Well, we're at highs, we're this, we're that, the other. I'm getting more structure. I don't need to go down and go, daily and then 4 hourly and then 1 hourly. Maybe go daily and then hourly. Just go straight to my hourly. Right, I just want to see what's going on. I'm going to stick in a 60-minute chart. I'm going to say, right, how many days do I want to see? I want to see a couple of weeks worth of data. Okay, I can see the rotations. I can see the levels. Right, now how's that going to affect my day trading? You only do stuff that's going to have a valuable input into your trading decision. There's no need to keep going every single time frame and kind of looking at it from different angles. Be confident in your idea. Say, I'm not trading until this level, or I want to position long. Let me find a good place to position long, or I want to wait for here to go short. Be confident in that and go down the time frame to help you pinpoint that. So then you go to your hour. Let's say you're day trading again. Now you go, right, actually, I'm not going to go to a 5. I'm going to go straight to a 3 because I like to execute from a 3. I'm going for how much shape pattern on a 3-minute chart to get short on. Great. This is the type of thing I'm looking for example. So 3 time frames max. Start your higher. Get a good picture. Don't stay there long if you're a day trader. If you're a swing trader, of course, spend a little bit more time analyzing. Then go down to your key kind of filtering time frame, if you like. So if you were a day trader, maybe that's a 15-minute. You go, hey, I'm only going to trade during these specific levels on a 15-minute, and then I'm going to execute on the lower time frame. So really, I would argue that second time frame you look at is the more useful one. If you're swing trading, maybe you're going from a daily to a 4 hourly. Say the 4 hours the filter, the hours the execution. So I want to get an overview, top-down overview. I want to use a filtering time frame, and then I want to have a trigger time frame. So your filter time frame might be, like I say, the hourly or the 15-minute for day trading, and then your trigger time frame may be a 3-minute or a 1 minute, whatever it may be. And you only then open that when it passes through this filter. And this filter is, hey, it's the level, it's the area, it's the position, it's all this. Now we're at a level I want to do business at. Let me go down to my execution trigger time frame and execute. So then you're not constantly looking at 3-minute. You're not constantly getting bogged down in the weeds. You're not constantly getting seduced by stuff moving and price pinging around when it's not at a reasonable level that you want to get involved in. Now, even for you scalpers, you still want to get involved in juicy levels. You don't want to get involved in the midpoint because you haven't got so much weight to the scalp. A little market exhausting and coming off a major low, 5-day low, it's a much more powerful scalp, even if you're fine tuning it on the 1 minute, than it is if it's in the middle of no man's land at lunchtime, around the VWAP, around the open, when there's no real supply demand imbalance. So higher time frame, get your picture, middle time frame or second time frame as a filter, and the third time frame as your kind of trigger. That's the way I like to look at it, and maybe that'll help you too. Take care, keep the risk managed. Bye bye.